Well, hello again, everyone, and welcome out. This is Ankit from Maverick Currencies here, and this is a market roundup. It's for Tuesday, July the 12th. So let's get down to today's market price action and talk about tomorrow, as we have some key events or key data that's about to come out, and that's where we're likely to see some bigger moves happen. So let's do a quick market analysis. Pay attention to where the relative strength and weakness is, and make sure we are on the right side of the market. So markets have not really changed much. We are seeing a back-to-back pullback in the markets. So if we just take a look at the S&P 500, we actually have now in this second consecutive day onto the downside. So in a grand scheme of things, if you just pay attention to this chart, we are in a sideways pattern. I mean, there are a couple of up days, there's a couple of down days. So this is what I call range bound market kind of price action. So we continue trading that way, unless we actually get some sort of catalyst from the markets. Maybe there's some key data that could change things around, especially with tomorrow as the U.S. inflation data is about to come out. But otherwise, market likely to continue trading the same way. So you just have to trade the markets in front of us. Same thing happening with the VT index. Again, the world stock. It's exactly doing the same thing. We're below the 20, below the 50, but in a sideways pattern so far. Now, the bigger move today was really in the oil market. So as you can see, today was another day where it was pretty much a negative across the board. S&P 500, VT, crypto, gold, oil, they were all down as well. So there's now back-to-back 2 consecutive days where everything was just on the negative side. Now look at the oil. Oil is down 7.61%, and that's a huge move. As we have seen, the oil has been trading above the 100 level for the longest time, and then today's move actually brought us back below to about 95 to 96 area. So this is maybe the last tower standing, as you can say. There's things that's falling off. All the big commodities that were actually flying in the past couple of years, they have all corrected quite aggressively. Lumber, cotton, if you take a look at all these things, they're actually, or copper, they have all tumbled quite a bit. So the only thing they're standing, which has been the biggest contributor for these inflation figures, is just the energy cost. So we are seeing now these things also start to tumble as well, which could be pointing to a peak inflation, but that doesn't mean tomorrow's data would be negative, because there's a delay, there's a lag. So you have to keep an eye on that one as well, that there could be just some sort of lag here in these report versus what's happening underneath in the markets. So as we take a look at the markets, we're down again -1. Not really have any sort of regime change. We don't want to be too aggressive in this sideways range where we could see a couple of up days and a couple of down days. So whenever we see a negative momentum, just continue trading that. And if we see a strong bounce, I think those bounces could just not last that long. They just last for maybe a day or two, and that's just the market condition that we are in. With the data coming out again tomorrow, we have the CPI. That's again supposed to come out quite strong. But that also being very much priced into the markets. Again, we all know the inflation is running hot, and I think if the number comes out higher than expected, I think it's kind of priced into these markets here. But if this comes out a little bit weaker, I think that's where we could see some bigger moves happen. But at this point, it's pretty much a coin toss here. Like I said before, there's a lag. If you look at last year, when everything was flying off, the commodity prices were off the roof. We didn't see CPI figures indicate that. And again, that's where there was a big disconnect. And that was, again, due to the lag that we see in these numbers and these reports. So I think tomorrow will be a bit of a coin toss. But we just got with the RBNZ rate statement tonight. That's they expect to raise the rates by 50 basis points, and that did not really affect the Kiwi to go higher. And I think this is where we are getting to, is as we are getting this peak inflation expectations start to come up across the board. I think this is where we start to see less hawkishness from the central banks, and that could lead to a bit of a change in the market regime, because in the past few months, all central banks are kind of in the rush to raise rates. And here we are, we're getting the rates to go higher. But if the commodity prices and everything start to come down, I think that would start to relieve some of the pressure from the central banks to even raise rates faster. So Bank of Canada against due on Wednesday. The Canadian dollar is pretty strong, and even though we got a pullback today in the markets, or in the oil markets, the CAD didn't seem to be as affected by it. But we'll take a look at the Bank of Canada rate statement that's due tomorrow as well. So tomorrow is a pretty busy day with the CPI figures and the Bank of Canada, and then later in the evening we have the Aussie employment figures as well. So let's just do a quick market analysis, see where the movements were, so we can pay attention to the relative strength and weakness. So as far as the crypto world goes, again, nothing different to report. Everything is down and not really seeing a regime change. And unless we get a change, we'll get excited then. But so far, not interested there. Now, currency world, this is where we start to see some movements here, back and forth. Well, again, it wasn't a big percentage change today. The Canadian dollar, again, of course, was leading the chart, and that could be again because of the weaker the oil markets today. But again, if you look at relatively how the oil went down by 8%. The CAD was only down by 0.32%, so that move was not big enough. Maybe the CAD is holding up until tomorrow when we get the Bank of Canada rate statement. But at this point, again, trading the news event, we have to really expect or pay attention to the forward guidance, because if they are raising rates, but their forward guidance is not as hawkish, then that could actually change some of that the course for these currencies here. Again, CAD has been one of the best currencies in the past few months, along with the dollar. Now, the yen has been a bit of a mixed bag here. Sometimes up, sometimes down. I think if you take a look at yen basket, it's also going in a sideways trend. So a bit of a range bound price action there. And then here we are, Aussie and Kiwi catching a bit of a lift today after a sell-off on a Monday. So you should really look at it, just a very anemic bounce, but nothing as spectacular where we can talk about some reversals here. So just short-term relief rallies that we just saw in these two other currencies. So overall, not a big exciting day, and I think this is where markets are waiting for some catalysts, and I think that's where we are going to see some bigger moves that come into the markets here. So as far as the velocity goes, you can see that a lot of things are sitting right in the middle there. There's only a couple of currencies where we actually saw a bit of a velocity. Dollar, euro remains a weak currency. Again, trend score is -3, but right now just seeing a smaller velocity. But I think euro is actually on the verge here for a bit of a more further weakness, especially as the euro dollar breaks below the parity just to bounce back, but still hovering around that area. But dollar remains the story here. As the dollar stays strong, we see everything else kind of put some get some weakness across the board. Again, Aussie, Kiwi, all these currencies that don't do well when the dollar is strong. So we're seeing that bit of the negative correlation there. So let's just talk about possible trades here in the next 24 hours, especially around that news events that we just discussed. So let's talk about dollar here. Had a lot of questions about dollar because dollar again continues to run, and every time we get these kind of price action without much of a pullback. I mean, if you take a look at it, this pullback back in May was much deeper. I mean, we almost got to the point where it hit that 50-day moving average. It was pretty much a do and die for the dollar, and here we are. Since then, the dollar has actually run up. If you just take a look at the percentage change from that point on to here, the dollar is up again 6%. So quite a recovery there. So the question is, how much more dollar has to run before it reverses course? And as again, if you take a look at the price action, I mean, dollar is consistently moving up. But as we get the CPI figures tomorrow or the FOMC the following week, I think that's a catalyst that could really change things around. A lot of times, we take a look at daily charts and we look for those exhaustion points or reversal points. But right now, I'm not really seeing that. And if you really want to see a change in that regime or change in that price action, I mean, pay attention to 4-hour chart, because 4-hour chart is still in an uptrend, making higher highs and higher lows. That's again a positive sign. So if you go back in time, again, you'll see when things changes. I mean, right here back in May, you saw when the 4 hours start to weaken here, that's when you know the party's over and the dollar is onto the downside here. If you look at this one, not really seeing that. So 4-hour chart is the key here. Again, if you look at Swiss franc as well, I mean, a great example, because Swiss franc was flying high, similar to the dollar, but as you can see where the change happened. It started to slow down, the peak started to become less and less high, and then that's what we're seeing. Now the Swiss franc is actually underperforming here. So it's all about relative strength weakness. It's all about the timing here. The dollar, again, we want to be short. Again, there's a lot of reasons for to be short the dollar, but right now the price action is not really telling us so. But again, to wait for those 4-hour charts to roll over, and that's when the momentum is actually weakening here. Now the Japanese yen, I've had a lot of questions, and if you take a look at Japanese yen, it's actually sideways. I mean, whenever I see things sideways like this, that's where you should not be too aggressive when it comes to your outlook. There's times where we got these big moves, and there's a lot more velocity behind it, and same thing over here. I think at this point it's kind of seems unclear that we'll get another run down like this. And remember, the dollar yen is hitting these key levels where there is actually a higher risk for intervention from Bank of Japan. I know the 140, I think if you go above the 140 level, that's where we start to see that. But at this point, extreme levels on a lot of these currencies. I mean, here we are, euro dollar, breaking below the parity just to bounce back. And at this point, I think every time you see this kind of price action, right over here, you can see it below a little bit just to bounce back. But this is very common. We might not break it right away, but we'll make multiple attempts before it does break. I mean, Aussie USD is a great example. Before it actually broke this 70 levels, you can see there was a lot of back and forth. As soon as it dipped below, it bounced back up. It dipped below again, bounced back up. So it was a pretty difficult short. But now, as you can see, that was the currency price is actually much lower since then. Now, the Euro Swiss franc, which is another good example, as it breaks that parity level, and you can see that as soon as it broke that parity level, it did have some bounces in between, and then it just continues to move lower. I think the euro dollar is kind of the same path here, and not really seeing a big reversal sign. And again, I think there's a lot more downside in this euro here. Again, might not be against all the euro USD, but if you take a look at euro basket, I mean, we are actually breaking support there. And as we know, if the basket breaks, then there's a bigger move on hand. And I think that's this point we went from directional sideways to now very directional. So I think I like further downside in this euro here. And again, it's a matter of pairing the right currencies for it. Now let's talk about CAD. Again, CAD is due tomorrow, and CAD's chart looks very similar to the dollar. I think the CAD probably would follow what the dollar does. And at this point, the price action remains strong. All these pullbacks are quickly bought out. So this is where it's been a very much a one-sided trade. Again, we got some nice trades off here and right over here, but outside of that, you can see that it's just a one-way trade. And again, if you want to see a regime change, go back to 4-hour chart. As long as it stays above the 20 to 50, I think it'll continue trying to bounce back up. But if it starts to give these levels up, I think that's where it'll give me a little bit better green signal to say, well, maybe it's peaked out in the shorter term and we want to see a pullback. So tomorrow, the Bank of Canada is expected to raise rates by 75 basis points. And again, that will bring the benchmark rate to 2.25. The RBNZ is now at 2.50. So you can see that they're getting closer to their upper end of their goal, about 3 to 3.5%. So I think at this point, it's not just the rate, but it's in the statement and the press conference is where we need to kind of pay attention to and see which way it is. But we could see initial price action on the upside on the CAD, but it's a follow through that we really want to trade. And at this point, it looks very extended to me. So I think where's the bigger move if there's a surprise on a further downside? I mean, look at Kiwi and another example here. We got the RBNZ to hike rates, but that did not result into stronger Kiwi. So this is something that we have to pay attention to. A rate hike doesn't mean a currency will rise. Overall, there's that sentiment that the currency follows, but the expectations sometimes are priced in. So you see a run up into the news event, and then you see a sell off right after that. So pay attention to those kind of price action, especially in the dollar and in the Canadian dollar. But overall, not really seeing any turn yet, but I'm actually looking forward to seeing a bit of a change of the regime here. And then I think that's where the big trades and big movements will come. But for now, we'll just pay attention to what's in front of us. We can talk about trades, we can talk about possible case scenarios, but at the end of the day, we got to trade the markets in front of us. Today could be a great day. Tomorrow could be a great day with these news events, or it could be a dud. Again, always go in with the plan, with a good risk to reward ratio trades, and just be consistent with it. And good trades will come along, and then that will make it worthwhile overall. So pair up relative strength and weakness. Pay attention to the CPI figures and Bank of Canada. So if you are very directional on the dollar and the CAD, again, I think wait for tomorrow. If you're looking for a regime change for both of those currencies, again, wait for tomorrow. I think that could be the catalyst that we're looking for. Thanks everyone for joining. Have a great